Hello, good morning, and welcome to another live technical analysis. Today, we're probably going to be starting with the greatest mover of the day or biggest mover of the day as of now. Probably the dollar against the Japanese yen. Let's just open the chat. There we go. Dollar against the Japanese yen, as you can see, it broke below our sideways moving channel. As a matter of fact, clear cut break, aiming for S2 144.40. So the yen strengthening across the board, and I'm going to be, let's see if we have Aussie JPY as well. Essentially, we're seeing that the Japanese yen is appreciating against its counterparts. And why is that? Well, there have been some speculation that the Bank of Japan may be ending its ultra loose monetary policy. So, what does that mean? Essentially, from having negative interest rates, they may be switching to more normal monetary policy. So, positive interest rates, as is essentially the rest of the world. If they do such a thing, a report by the ECB about a few months ago hinted that it may have significant impact on European bonds. But why? Well, with negative interest rates, we may have been seeing funds from Japanese individuals based in Japan, I should say, going abroad, perhaps into European stock markets, American stock markets, and with higher interest rates that may result to a repatriation of those funds and reinvested domestically. Furthermore, it could also appreciate the Japanese yen in comparison to its counterparts, which is why we may be seeing this move currently occurring. It's broken below S1, so this would be support now turned resistance. So R1, then we'd have R2. We're going to be removing R3. Take this point here. And why have we removed R3? Well, simply put, close to R2, and given this significant move, it may be prudent to allow some distance between our support and resistance levels. So you can see it had broken below our support level, which is now resistance, and it's currently aiming for S1 at 144.40. Now, based on this move, perhaps we should place S2 slightly lower in order to adjust for this significant development. So slightly lower, 142.48 for S2. And then for our S3, perhaps we could place the next level of support at this point here, 140.85. From a technical point of view, RSI dropped below 30. It's actually at 24, which may imply that it may be oversold at this point. So it could be due a market correction higher. So we would not switch to a bullish outlook if it moves slightly higher. If it does break above R1, then yes, potentially we could switch towards a bullish outlook. But if it simply corrects higher up to R1 and then continues moving in downward fashion, we would maintain our bearish outlook. Now, I see two imminent scenarios, I'd say. One is the continuation of this bearish movement. As you can see, it's aiming for R1, 144.40. For this to continue, it would have to break below S1 and aim for S2. So this would be scenario number one. Scenario two would be a small market correction higher, but not breaking above R1, and then moving in a sideways fashion between S1 and R1. Whereas for a bullish outlook, which is scenario three and appears to be slightly unlikely at this point in time, it would have to break simply above R1 and move towards R2, so testing resistance at 148.30. But the pair appears to be predominantly guided by the market expectations of a potential rate hike by the Bank of Japan. It should be noted that the market is anticipating a rate hike in March of next year, so 2024, but we may see some hawkish remarks from the BOJ in the coming week, which is why we may be seeing the Japanese yen appreciating against the US dollar and its other counterparts. Over there in the euro against the US dollar, now it continues moving in a downward fashion. RSI is still near 30, so currently maintaining our hypothesis yesterday. If it does manage to break above this downwards moving trend line, then we would switch to a sideways bias. Now, the issue with the euro, I'd say, is Germany. Germany is the largest economy in Europe and it appears to be weakening. So their strength and economic data that's been coming out during this week appears to be hinting at worrying signals for the euro economy. As such, we may see the euro further weakening. And we should also note from a fundamental point of view, Germany's budget balance of the government, it's a bit there's a bit of an issue, I'd say. One is the court did not allow the government to use funds that were reserved for COVID measures, so they're trying to adjust their budget. The EU finance ministers are trying to meet to see if they can find an agreement on revising the debt to GDP ratio, if I'm not mistaken. So essentially, some fiscal rules, but it's worrying. Germany's economy appears to be deteriorating, so to speak. As such, euro further weakening as the markets may be anticipating the ECB to cut rates sooner rather than the Fed. Therefore, the dollar gaining against the euro. From a technical point of view, the RSI is still at 30, implying a bearish market sentiment. It's broken slightly above our downwards moving channel, but not sufficient enough for us to switch to a sideways bias. For that to occur, it would have to fail to break below S1 at 1.0750 and break above our downwards moving trend line, which was incepted on the 29th of November. And then we could switch to a sideways bias. And it would also coincide to the mid-range of the Bollinger Band. So for a sideways bias, S1 and R1 remaining confined. For a bullish outlook for the euro, it would simply have to break above R1 at 1.08650. But for now, from a technical and a fundamental point of view, for the euro against the dollar, we would maintain a bearish outlook with the next target being S1, 1.0750, and then 1.06170. For the British pound against the US dollar, it's broken below our sideways moving channel yesterday. As you can see, it managed to break below, has met resistance, so this would be support now turn resistance, and purely on that, we could switch to a bearish outlook, correcting slightly higher, and then I expect it to potentially move lower. We could bring S1 slightly higher, this previous higher low, 1.24760, and then we could bring S2 at 1.2265. Let's remove our old R3. And then for S3, we could place our support level at 1.2070. This point here met heavy support, moved higher. Therefore, S1, S2, and S3, R1, R2, and R3. And now we could actually draw a downwards moving trend line. So maintaining a bearish outlook for the British pound, or cable, I like to call it that. For the Aussie, so in terms of the Australian dollar, China's trade data was sort of mixed. And when we say sort of, it means that the import rate was lower than expected, which appears to have been weighing on the Aussie. So a lower than expected import rate, as we stated yesterday, implies that there may be a reduction in demand for Australian goods. In such a scenario, we may see less demand for the Australian dollar, which could in turn weaken it. Now, the mixed data I was referring to just a moment ago was their exports rate. Their exports rate actually came in better than expected. So, from a more macro perspective, it may be indicative that China's economy is recovering at least slightly. So, it may have countered the effect on the Australian dollar. And what do we mean by that? Well, perhaps initially the Australian dollar moved lower. But then, from a more macro perspective, so if China's economy is recovering, then that means in the future we may see an increased amount of imports as well, perhaps, which is Australians' goods, their exports, which are raw materials, in order to increase their manufacturing, which is why the Australian dollar is also, well, appears to be correlated with the manufacturing data stemming from China. So, from that point of view, we may see some support for the Aussie. On a daily chart, You can see that yesterday it moved downwards and today it's moving slightly higher. It's found some support at the S1 0.6505. So we could do one of two things. A, we could bring S1 slightly lower to represent this lower low, 0.6535, or we could have kept our support level as it was previously. But based on the data, let's bring it slightly lower. Now, one could say that this is a breaking of our a downwards moving trend line. They would not be mistaken. But this is the mid-range of the Bollinger Band, so this could be a market correction before moving lower. On the other hand, you have the RSI, which is at 45, so close to 50. So for this particular pair, we could maintain a sideways bias based on this technical indicator, well, the downwards moving trend line, which was broken, and the RSI, so staying between S1 and R1, which could also be the reason as to why we've dropped our S1 slightly lower, as had we kept it at this point, which I'll show now. In blue, the price action came lower. So let's readjust our S1 level. And since we're going to be maintaining a sideways bias, it managed to reach this level. It broke below, but then moved higher. So it's more, I'd say it would be more appropriate for our S1 to be dropped slightly lower to represent this new price action, and then sideways bias between S1 and R1 for the Australian dollar. For the dollar against the Canadian dollar, so the loonie, yesterday, the Bank of Canada remained on hold as was widely expected. Now, during yesterday's trading session, it gained slightly. So we saw some contradicting statements, I'd say, from the bank. Essentially, in their accompanying statement, the bank was concerned about the economic resiliency of the Canadian economy. So, in theory, that could weaken the Canadian dollar, which is why we have seen a slight gain by the dollar against the Canadian dollar. Whereas they did say that there is a possibility that they may need to raise interest rates further, which appears to be a given in the majority of central bank accompanying statements. So it appears that the markets may have taken predominantly the concerns about the Canadian economy, and it may have dictated the pair's price. However, we're not seeing a clear cut bullish outlook yet. And why? It hasn't broken above R1. So our resistance and support levels that we have placed together yesterday appear to continue to be validated. Our size it's still near 50, so it's at 54 right now, which implies a neutral market sentiment for the pair. Narrowing of the Bollinger Bands, which are about to coincide with our S1 and R1 levels in terms of the lower bound of the Bollinger Bands and the upper bound, could further support a sideways bias outlook. So maintaining a sideways bias for the US dollar against the Canadian dollar. For gold, looking at the 4-hour chart, now it appears to be validating our upwards moving trend line. So this was the third in a series stemming from the 13th of November. I still think that this could be a market correction, slightly higher up until R1 before continuing its downwards motion. Yet our senior 50 could imply a sideways bias between S1 and R1. Such, I would not have a bullish outlook on the precious metal. But if it does break above R1, then perhaps we could maintain a bullish outlook. But for now, sideways based on the upward moving trend line and the RSI indicator below R for our chart. So sideways between S1 and R1, which is 2016 and 2048. For a bearish outlook, it would have to break below our upward moving trend line and below S1 at 2016. For a bullish outlook, simply breaking above the 2048 R1 resistance line would be sufficient for a bullish outlook. And we'll be looking at the S&P 500, the Nasdaq 100, and the Dow Jones 30. We're also going to be looking at oil, and perhaps we could look at a few stocks. Now, in terms of oil, it's broken below S1 at 70.16. So this would be support turn resistance, bearish outlook. Now, let's just finish our support and resistance levels before we proceed further. this low, 61.80. Turn this to green. So R1 is support and resistance. Now, for oil, we maintain a bearish outlook on the commodity based on the fact that it's broken below support and resistance at R1, 70.60. It appears to continue validate our downwards moving channel, even though it's broke slightly below it, it's still within it. So for a bullish outlook, it would have to break above R1 and then break above R2 as well. As simply breaking above R1, it would still be in our downwards moving channel, whereas breaking above R2 as well would be sufficient for a bullish outlook. RSI running along the figure of 30, implying a bearish market sentiment for the commodity. In addition, the Bollinger Bands appear to be moving in a downwards fashion as well, further supporting hypothesis for a bearish outlook for oil. Now, on a weekly basis, it's continuing, and I think it's about 8 weeks in the reds if it does finish in the reds tomorrow. So, 8 weeks of declines for oil is possibly concerning for Saudi Arabia, who would have liked to have higher oil prices. But it appears that the market expectations, the market is driving oil prices lower. It could also have been aided by, or the interesting story was the US EIA crude oil inventories figure that was released yesterday. The figure implied a greater than expected drawdown of oil, which could in turn imply that there was a greater demand for oil than was previously expected, which may have temporarily supported oil prices. But the reason as to why we said temporarily, it appears to continue to be moving in a downwards fashion. Next target for the bears, 67.20 and then 64.20 for S2. For a bullish outlook, breaking above R2, sideways remaining between S1 and R1. Now we're going to be looking at the S&P 500, volumes, RSI. So on a monthly basis, came back made a high, corrected lower, and then continued its ascent. On a weekly basis, it's in the reds. On the daily, it's moving slightly downwards, I would say. So having broken our upwards moving trend line, it's moving in a sideways fashion. The RSI is still at 60, so it implies a bullish market sentiment, but it appears to be moving in a slightly sideways fashion. You could say it's still bullish based on the RSI, but based on the past few days, it does not appear to be that way. If it breaks below S1 at the 4,535 figure, then we would switch to bearish outlook, with the next target for the bears being the 4,345 S2 support line, whereas for a bullish outlook, simply breaking above the 4,630 R1 resistance line would be sufficient for a bullish outlook to occur. Note that the Bollinger Bands are narrowing. Now the mid-range is at S1 currently, so could have been a market correction and then moving higher. But from a fundamental point of view, I still believe that the S&P 500 may actually move in a downward fashion, but it would have to break S1. For today, we're noting the weekly initial jobless claims figure, projected to be released, the ADP non-farm payrolls figure yesterday, which was lower than expected, may have weakened the dollar, but it appears that the S&P 500 has not reacted positively to that release. I think the majority of market participants may be waiting for tomorrow's NFP data. Next week, we have the Fed's interest rate decision as well, which could be concerning for traders depending on the NFP figure, which is due to be released on Friday. Now, the reason I've also mentioned the Fed's interest rate decision next week is because we're in the Fed's blackout period, which means no policymakers will be speaking up until the decision by the Fed. So for now, from a technical point of view, sideways, but on a personal level, I think it's bearish, breaking below S1. But then you have the RSI, which is near 60, so it implies a bullish market sentiment. Now the Dow Jones 30 have been overbought, so correcting lower. So this could be S1, S2, and then we have R1 at this high that was formed. And that was the all-time high, so we need to extend, or let's measure the distance between R1 and R2, 534. 37,320 for R3. You have S1, S2, and then S3. Technical, bullish. This could have been an upwards moving trend line. Broken, then redrawn. Now, if it does break, which appears it's currently doing so, for a bearish outlook, it will have to break below S1. For a sideways, failing to break below S1 and then failing to break above R1 could constitute as sideways bias, but based on the fact that the Bollinger Bands are moving in an upwards fashion, RSI near 70 at 69, imply a bullish outlook for the Dow Jones 30. Now, the Nasdaq 100, though, on the other hand, appears to be a different story. Now, this could have been one downwards moving trend line. This could have been a second. It's below R1, so it's testing resistance at the 15,825 R1 resistance line. RSI below 50, so implies a bearish market sentiment. For that to continue, it will have to break below S1 and then perhaps take aim for S2. If it does break above R1, it would not constitute as a bullish outlook. It would have to break above R2 as well. So if it does break above R1, it could stay between R1 and R2. I've spoken about oil, Nasdaq 100. Turkish lira, I think, is relatively pointless, but for our daily, weekly, Turkish lira continues to deteriorate. I'm actually finding some resistance at a figure we had placed. I don't really remember when, but 29 big figure. Bullish outlook, way overbought, but it continues to be moving in upwards fashion. Deutsche Bank finding actually broken above R1, R2, and R3. So these are essentially resistance and support levels. So bullish for Deutsche Bank. Now, from a fundamental point of view, for American banks, not Deutsche Bank, which is German, they testified before Congress yesterday, and essentially they were against the implementation of the Basel III Accord. Now, essentially, that would restrict in theory, it would restrict funds that banks would have available in order to lend. So they may charge higher interest rates, which could hurt the consumer and small businesses, etc., etc. So if that appears to be gaining some traction, so the failure to implement, we may see American bank stocks actually gaining. So Goldman Sachs, JP Morgan, Morgan Stanley, Citigroup, and so on. So we've placed our support and resistance levels. 1173, 1224, 1277, Deutsche Bank, and then you have S1, S2, and then you have S3. Japan's GDP rate is due out in tomorrow's Asian session, so that may be interesting for those of you who may be trading on the dollar against the Japanese yen. In terms of the euro, what we forgot to mention is that the Eurozone's revised GDP rates for Q3 are due out later on today. Based on what we're seeing from Germany, I would not be surprised if they come in lower than expected, which could potentially weigh on the euro. Whereas, should they take the markets by surprise and come in better than expected, it may provide support for the euro and keep it between S1 and R1. Or if they're much greater than expected, even breaking above R1. We could look at Intel, Google. Let's start from let's do Airbus. So the reason as to why I'm choosing Airbus right now is that a story had broken by some news agencies that there was this firm in the UK that was selling spare parts for I'm not sure for which kind of engine. It was for a particular type of plane, and it appears that they were falsifying their records. Today, Bloomberg reported that one of those executives was arrested, if I'm not mistaken, and we're seeing airline companies reporting issues, well, not issues, reporting that they had actually sourced or purchased parts from that company. Could be in their stock price, but the issue is if, God forbid, an accident happens midair with one of those planes and it's based on faulty engine part that was supplied, which actually does not appear to be the case. It's more of a far stretch, and any issues that may have um, been in the engines of those planes have probably been fixed, replaced, etc. The second the news had broken that that company was supplying fake parts, allegedly supplying fake parts, such not really much of an impact on stock prices. 142.55, or we could actually drop it to 50, and then 150. Too far. 149. Let's measure the distance. 376. 147 might be better. So you have R1, R2, R3. 130.60 could be S2. And then 126.10. This is for Airbus. From a technical point of view, it appears to be moving in upwards fashion, formed an upwards moving trend line since the 1st of November approximately. RSI still near 70 to 60. Could be a small market correction before moving higher. So a bullish outlook on Airbus. Now we could look at Goldman Sachs, Morgan Stanley. Based on the technicals for Goldman Sachs, sideways, broken below our upwards moving trend line, and staying between S1 and R1. RSI near 50, implying a neutral outlook. Morgan Stanley the same. Uh, Actually broke above our resistance levels. Actually might be better. RSI dropping near 50 implies a neutral market sentiment, as we've said many times during today's technical analysis. So we're simply readjusting our support and resistance levels. It's too close to S1, although this would be a nice support level. Could easily be broken. So 75.90, 78.50, and then we can keep S3 71.20, R1 81.10, R2 84.50, 86.68 for R3. Sideways between S1 and R1. Tesla as well, between S1 and R1. You can have a look at the support and resistance levels. See what else we can do. The New Zealand dollar that we looked at yesterday. So the Kiwi appears to be moving in a sideways fashion, as we had seen. So indeed, a sideways moving channel with the narrowing of the Bollinger Bands and the RSI remaining near 50, maintaining a sideways bias for the pair. Starbucks. Actually, I'd like to look at ExxonMobil today. So ticker is hashtag XOM. Template. There we go. Full grid. Can go to the 4-hour chart. Let's find our support and resistance levels. This could be S1. Actually, I'd rather take this point in time, 79.40. And then for S2, previous high. But actually might be a bit too close to S1. So we can begin. So where are we going to place our support level at S2? Previous low, 89.96. And then S3, 83.87. And then R1, 105.20. Then for R2, this old high, 113.40. And then once again, an old high, 120.25. And then we should add an indicator as well to further validate our bearish outlook. And then their size probably around, I'd say 40, but let's see. No, it's actually 28. So strong bearish market sentiment for ExxonMobil could be weighed down by the speculation or the rising tensions between Venezuela and Guyana. And why? Well, essentially the Essequibo region that Venezuela has had a referendum on Sunday in regards to whether or not it belongs to Venezuela, in addition to the formation of new maps that include the region and imply that it is part of their territory, whereas it currently belongs to Guyana and is a matter which is being disputed, could potentially weigh on ExxonMobil's stock price. But you may ask, why? It's two countries, it's not ExxonMobil. Well, if you look at who owns the majority of that region that is currently oil rich and had, by pure coincidence, discovered large oil reserves in the past month, that would be ExxonMobil. So escalating tensions in the region could potentially weigh on the company's stock price. So for now, we're maintaining a bearish outlook on ExxonMobil, but from a more macro perspective, should their merger with, if I'm not mistaken, I think it's Pioneer, proceed, then we may see some support for ExxonMobil from a more macro perspective. And then we've done Tesla. Lastly, we're going to be looking at UBS. Our old support and resistance levels appear to be validated even today. Bullish outlook for UBS could have been a market correction. Upwards moving Bollinger Bands, RSI near 70 imply a bullish outlook. And you could attempt to draw an upwards moving trend line, not valid based on the gaps that exist. But still, RSI, upwards moving Bollinger Bands, above S1 of 26.79. And for a bullish outlook to continue, it would have to break above R1 simply. For a bearish outlook, simply breaking below S1. And for a sideways bias, staying between S1 and R1. And with that, that does it for today. Thank you for watching.
Okay, I guess we'll just go ahead and get started now. So, first things first, as per usual, a disclaimer. So, products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of material is strictly prohibited. Okay, so I'm Melanie and I will be your speaker for today's webinar on support and resistance. So here's our agenda for today. Firstly, we'll be looking at using swings for support and resistance levels, followed by looking at where exactly you should place your starting points. And then we'll be going into pullbacks and overlaps and combining these two in order to use these with Fibonacci as well. Okay, let's get started. So firstly, we'll go into how exactly you can use swings for support and resistance levels. So support and resistance levels in trading basically refer to prices at which an asset's price tends to stop falling, which would be your support, or stop rising, which would be your resistance. So to identify these levels, you can use technical analysis tools such as trend lines, moving averages, chart patterns, so on and so forth. Additionally, you can also look at previous highs and lows of the asset, as well as volume data to identify potential levels of support and resistance. So this is basically what we will be focusing on today. And it's important to note that these levels are not absolute and can change over time. So continuous monitoring is necessary. So I've added an image here for you to see how exactly we can use swing highs and lows as resistance and support levels, but we will go through it more in depth in the next few slides. So take note of how there are clear peaks and troughs in the market structure, and these areas can be used as your support and resistance levels. Okay, so firstly, let's look at an example of insignificant swings. So these are bad points to use for Fibonacci starting and ending points, but they're also not exactly good to be used for resistance and support levels. And I've shown you an example here in the GIF. So you can see that the um, price movements are really small and there's no significant swing highs or lows. Here's another example. So once again, there aren't really very clear swing highs or lows, and price movement is very small. Okay, and now let's take a look at a correct example of significant swings. So here you can see that there is a clear move up and down with obvious peaks and troughs and yeah, clear market movements basically. So in this drift, that's basically what you are looking for when you are deciding on a chart to analyze on. So people may ask like which time frame do you use, which time frame do you recommend? And it's completely up to you. It depends on what kind of trader you are. So if you're a scalper, of course, a smaller time frame would be better. And if you are a swing trader, a longer time frame would be better. Okay, but still, when deciding which time frames to use, a important consideration is also the clear market structures. So you want to look for something like this, a clear market structure with significant swing highs and swing lows. Okay. Okay. So support and resistance. You can use these levels as take profit and stop loss levels. But you should not use it as an entry if there are no other supporting arguments, such as Fibonacci or other graphical levels to support your analysis. Using a recent swing high or a recent swing low is typically considered a weak level if it's just that level alone. So you can see in this GIF here, oops, in this GIF here, the recent swing high and lows, although they are significant, so you can see them very clearly, but they are not strong levels to use because we don't have additional Fibonacci levels to support them, and we don't have pullback or overlap support levels or multiple swing high or swing low support levels. So I'll show you what exactly I mean by that. So this is typically what you want to look for. So we're looking for multiple swings. So if at least two swing high or swing low levels line up nicely, these are typically much better levels to use. So you should try to find areas where these might line up, and it does not necessarily have to be at the exact same level because these tend to be areas more so than levels. So in this GIF here, you want to see how far you can, yeah. You want to see how far back your resistance or support line can go, and it's okay to cut through small wicks since support and resistance levels are usually in areas. Okay, so you can see here we have four swing highs that are about the same level, and we want to avoid cutting too many candlesticks, but if you're just cutting the wicks like in this example here, that's perfectly fine. Okay, so now that we know how to identify significant swings and use them as support and resistance levels, what are some things that we can look out for when inputting a support or resistance level? Okay, firstly, picking a starting point. So when picking the starting point of pivot, which is your entry level, support and resistance levels, these are typically your rules that you can follow. Excuse me. So firstly, we want to check if there is a swing high or low, and we've gone through those in the previous slides. We also want to look for pullback or overlap levels. So if you are wondering what exactly those are, I'll get into those in the coming slides. Next, we want to go as far back as possible. So as you saw in the previous slide, I did mention we want to try and pull it back as far as possible without intersecting too many bodies of the candlesticks. So we want to avoid cutting the thick part of the candlestick and just the wick. So just the little sticks on top of the candles, those are perfectly fine. Okay, so the orange thumbs over here represent an okay intersection. They're not preferred, but not exactly wrong. But preferably, we want to look for intersections that are only of the wicks, like over here. Okay, some more examples over here. You can see this thumb, this red thumb is what we want to avoid because it's cutting too many bodies of the candlesticks. So these green thumbs are what you typically want to look out for, where you are just cutting the wicks of the candlesticks. Okay, okay. Another example here. Similarly, this red highlighted area, it's not preferred because you're cutting too many bodies of candlesticks. Okay, yeah, so the green thumbs, again, just cutting the wicks of the candlesticks. So something like this, would have multiple swing highs. We can just stop the support, or in this case, resistance. We can stop the resistance level just at this green thumb here. And it would already be considered a pretty significant level because we have three swing highs that line up nicely at the same level. Okay, which is important because you can see that price has tested this level many times before. Okay, next let's go into the pullback and overlap. Let me know in the chat if you guys have are aware of what exactly pullback and overlap level is before I show you guys the next slide. Okay, I think yeah, because I do mention these a couple of times in our previous webinars, but no worries. Let's just go ahead and take a look at these. So firstly, we have pullback. So pullback, from the name suggests, we are expecting price to pull back to a certain level. Okay, so it's basically a strong level of support because it breaks out from a previous resistance level and price is now dropping back to visit it again. So in this case, we're just talking about the pullback support first. So if you take a look at the GIF, this is a pullback resistance. So just ignore that for now. Okay, pullback support is basically the opposite of that, where we are expecting price to retrace back to your support level. Okay, so a pro tip is when a pullback support lines up with a Fibonacci level, it's typically considered to be very powerful. For pullback resistance, these work well when it breaks a significant swing low and then starts pulling back to it. So it's even better, again, if there are multiple Fibonacci levels that are lining up with it. So here in this GIF, we have, okay, ignore the Fibonacci levels first because it is a little bit messy. But if, maybe I'll just refresh it. Okay, so here is our swing low for reference. Okay, so this is our swing low that we are using as a support level for now. But since price has already broken it and it's dropped below the support level, it's then a resistance instead. Okay? It's a resistance because we are expecting price to reverse off of that level. And that's why we call it a pullback resistance, because we are expecting price to retrace back to the level and pull back to it. Here it is a little bit confusing, so let me know if you guys have any questions. But now if we talk about the Fibonacci levels. So here we are using a Fibonacci retracement. Okay, and I'm circling the 38.2 because it lines up nicely with my retracement. Once again, I have another retracement. In this case, the 61.8 lines up with my resistance, pullback resistance level. Okay, and now you can see that price really pulled back to our resistance and bounced off of it and headed downwards again. Okay. Okay, maybe I'll just let you guys watch the GIF one more time. So price has broken out of the support level, the swing low support, becoming a pullback resistance. Okay, and now that the resistance lines up with not one but two Fibonacci retracements, it's considered a confluence area. That's why I've highlighted it. Okay, and yeah, you can see price reversing off of the level again. Okay, so confluence areas typically are considered quite important levels because you have multiple Fibonacci levels or moving average levels or whatever that line up with your support and resistance. Okay, so those are is basically evidence that price is likely to respect that level again. Okay, so here's an example. Firstly, I have three swing highs that line up nicely. Okay, at this area, this red highlighted area. Price breaks out of the resistance area and it moves upwards. Okay, moves upwards, and once it breaks out of this area, it's considered a not Fibonacci, it's considered a pullback support. Okay, um, basically, when you have a resistance, once price cuts or breaks out of the resistance, it's then the opposite. So then it's a support instead. Okay, so then we call it a pullback support because we're expecting it to pull back or retrace back to the level, as you can see from the dotted arrows here. Okay, another example. In this case, we have a pullback resistance. In the beginning, we have three swing lows that line up nicely. Okay, so swing low, we would think of a support. Now that price has broken out of the support level, it's then a pullback resistance instead. Okay, so the pullback resistance, we're expecting it to retrace back to that level. Okay, another example here. So we have a significant swing low here over the circled area, and thus it is a possible support level. But now that price has pulled back and it has surpassed the swing low support, it is then a pullback resistance. Okay, so now let's see if price pulls back to this resistance level. And you can see that it actually did. Okay, so price has reached the pullback resistance level just as we expected. And once it reaches and reverses off of it, it will then be called a resistance overlap resistance level, which is what I'm going to get into in a little bit. Okay, okay. Next we have the overlap support and resistance. So an overlap support occurs when there are prices that touch the line from the top and from the bottom. So the more times that it reacts off of that area, the stronger the level is. So the reason for this is because it means that there are bulls and bears that are respecting that area, and therefore it's an important point to take note of. Okay, so once again, if your overlap area lines up with other elements such as Fibonacci or graphical elements such as your um, moving average or pivot points, for example, it will make it even stronger. So in this GIF, an overlap resistance happens when price touches it from the first point, which is over here, and from the bottom, which is here. Basically, when there is a swing low and a swing high that line up nicely in the same area. That's basically what an overlap level is. Whether or not it is a resistance or a support depends on what the latest where the latest point touches the line. So if it touches it from the top, it is a support. If it touches it from the bottom, then it's a resistance. Okay, here's an example. So the swing low support becomes a pullback resistance once price breaks the support at this 105.643 level. Okay, so you can see in this GIF how price retraced or pulled back to this resistance level and in fact reversed off of it, making it now an overlap resistance. Okay, so you can see here the minute that price, here in the original image, price broke out of the swing low support. So once it breaks out of the swing low support level, it is then considered a pullback resistance. And once price retraces that level and reverses off of it, then it is a overlap resistance. Okay. Okay, let's move on. So now we're gonna combine both pullback and overlap levels. Okay. Excuse me. Okay, so here we have a big swing high resistance level, okay, at the start, and price surpasses this level over here. Okay, so the moment price surpasses this swing high resistance, it now becomes a pullback support instead. Now price has made a pullback to a pullback support and has bounced off of it perfectly. So once price bounces off of it, it then becomes a overlap support instead. Okay, another example. So we have two swing highs that are lining up. You can see these purple circles here, and we have a swing high resistance from this. So price surpasses this level here, it breaks out of it, and then becomes a pullback support. Number 3, point 3, price has pulled back to our support and has bounced off of it twice. So the blue circles is where price bounced off of it. So once price bounces off, it now becomes an overlap support. Okay, I think by this time you guys probably have gotten the hang of it. So this is just my last slide, and then we will take a look at some charts. Okay, so once again, combination of pullback and overlap. Firstly, we have a multiple swing low here. Okay, 1, 2 circles here. Point 2, pullback resistance. Once price breaks the multiple swing low support, it then becomes a pullback resistance, and then it reverses, pulls back to our resistance, and reverses off of it 3 times here. Okay, so once price breaks out of this overlap resistance, it then becomes a pullback support once again. So every time it crosses the level, it basically switches from a support to a resistance or from a resistance to a support. Okay, and then 0.5, lastly, price has pulled back to our support and reversed off of it. So this level at the 33420, you can tell that it's a very significant level because price is continually retesting it. Okay, so what's important here is that because it's a pretty significant level, you can also expect Fibonacci levels to line up nicely with this level. Okay. Okay, now let me pull out my trading view and then we can take a look at some charts together. Let me know in the chat if there are any specific charts that you would like to see. Okay. Um, okay, here are my charts. Okay, if there are no specific charts that you guys would like to see, I'll just go ahead and maybe analyze gold first. Okay. Oops. Okay. Okay. So this is an example of a really clear um, price movement. Okay, so we have three swing highs here, and you can see really clearly the peaks here. Okay, okay. So we have a swing high, multiple swing high resistance here at this level. Okay, and we can see price um reversing off of it. Okay, and this is on our weekly time frame. So we like to look at higher time frames first so that we get an idea of what the general direction of price is on a zoomed out kind of basis. And then we can compare with the lower time frames after. So once again, I'm looking at this on a weekly daily time frame. Okay, and I can see that we have this decreasing trend line. So I think in our next webinar next week, we will be talking a little bit more about trend lines and trend channels, but I'll just briefly go through what makes um, a valid trend line. Okay, so what makes a valid trend line is if there are at least three touches on a trend line. And if it is decreasing, your trend line should be drawn, or rather, if it's a downtrend, your trend line should be drawn like this from the top. Okay, if it is a ascending trend line, then we can draw it like this, so from the bottom. Okay, but of course, this trend line is not valid because I don't have three touches on it. But this is basically what you are looking for a ascending trend line. Yeah, so sorry about my throat. The weather is getting cooler, so I'm feeling a bit under weather. Okay, so now let's look at the 4 hour time frame. So we typically like to analyze either on the 4 or 1 hour time frames, and how we decide between the two is like I mentioned earlier by looking at the chart structure. Okay, the price structure. So you can see on our 1 hour time frame, it isn't really nice to analyze on. And the reason for that is because price movement is like pretty small. Okay. It's quite small. But if we look at our 4-hour time frame, you can see that we have much clearer price movements. So that's basically what we look for. Okay, so I'm gonna analyze this on our 4-hour time frame. Okay, let's see. We're gonna start off by identifying the trend. So we can all agree that this is a descending trend line, right? Or rather a downtrend. Now I'm gonna see if I can find any graphical analysis to support that. So I kind of have a descending trend line here. Okay. Now that I've done that, the next step is to go in with support and resistance levels. Okay, here is my my second support, second resistance. My first, okay. I'm gonna see if I can find a closer resistance level. Okay, this level here is my first support. Okay, and then my first resistance, maybe here. And then my second support just here. Okay, so maybe just a recap. So my second resistance, I have a swing high here and a swing low here. So it makes it an overlap level. And then I also have another um swing low here. Okay, so I have bulls here and bears, both of these areas respecting my second resistance. So it's a pretty significant level, and that's why I have labeled that. Okay, and my first resistance, I just have a swing high here. Price has kind of broken out of these levels. Okay, so that's I only have a swing high level here. Okay, and that's the reason why my next step is to go in with Fibonacci levels to try and support these levels a bit more or adjust them and see if I have any better levels to use. Okay, first support is because it's the closest swing low to where price is currently at. Okay, and it also respects a couple of swing highs and lows. Okay, second support, the reason why I put it there is because we have this swing high here and a couple of swing lows here as well. Okay. Yeah, and it's also basically the closest level to my first support. Okay. Now let's go in with our Fibonacci levels. Okay, so here I'm using a Fibonacci projection. Okay, and for Fibonacci projection, we use these 3 levels, and we use the tool Fib extension. Okay, that's on TradingView. If you're looking at MT4, I think it's also this symbol, but I don't think it's called an extension, but it basically has 3 points for you to analyze. Okay, and for Fibonacci X projection, just to recap, if you weren't here for our Fibonacci series, we look for a flash, okay, a flash or like lightning bolt kind of shape. Okay, something like this. Okay, here, even though you can see my 78.6 lines up nicely with my first resistance, this is no longer valid because price has already broken out of the level. Okay, so I'm just going to keep my 100% here. That lines up with my first support. Okay. Um, Mm, okay. Here I can see that this Fibonacci retracement lines up with my 61.8. Uh, the 50% is no longer valid because price has already broken out of it. Mm, yeah, so just my 61.8. Okay, and this is a retracement. So for retracement, we use the 5 levels that I was using earlier: 23.6, 30.2, 50%, 17.6, and 61.8. Okay, I think that's all the levels that we have here. Okay, I think that's all the levels we have for Fibonacci. So the next step is to go in um with some indicators, and my favorite indicators to use are the Ichimoku and the MACD. For Ichimoku, I like to just look at the cloud, which is just the plots here. Okay, because if you look at all of the lines, which you can as well, but it is a little bit messy. Okay, so I like to just look at the clouds because at one glance you can see exactly what the signals are. So if price is moving below the Ichimoku cloud like it is here, price is moving below the Ichimoku cloud, so it is a bearish signal. Okay, so it supports our analysis that price is likely going to continue to drop from the first support down to the second support. Okay, um, but over here, our MACD is giving us a bit of a bullish signal. You can see from the green here. Okay, and the reason for that actually could be because, as I mentioned earlier, our first support is here. Okay, and it's a pretty significant level with the swing highs, the swing lows. So it's an overlap support, and we can expect price to come back and retest this level, which is doing now, as you can see. And on top of that, we also have this 100% Fibonacci projection. Okay, that has not been um it's not been surpassed yet. So we're still seeing price test this level, but because of the downtrend from this descending trend line, we saw on the daily, the weekly time frames that price is still pretty bearish on those levels, on those time frames as well. So we can expect price to continue to drop towards the second support because of all the downward pressure. Okay, but for now, it is still testing our first support. Maybe we can use another indicator. Okay, let me know in the chat what indicators you guys like to use. Okay, I like to use these three. Okay, on our RSI, we're also seeing a decreasing trend line, so it's also supporting our bearish signal here. Okay, let me know if there are any questions. Oops. Okay, if there are no questions, I think we still have time for one more chart. So if you guys don't have any requests, I'll just go ahead and do maybe the Aussie dollar because we recently saw the RBA releasing a cash rate statement. So let's take a look and see how price affected the charts there. Okay, so same thing, I'm gonna analyze this on a weekly chart. Okay, um, let's see. Yep, we have a descending trend line on our weekly time frame. Okay. Next, if we take a look at our daily time frame, also descending trend line here. Okay. Remember the three touches here. Okay. Next on our 4 hour time frame. So once again, I'm deciding between 4 or 1 hour, but both of these charts seem to be pretty clear. Um, maybe I'll just go ahead and analyze this on a 4 hour time frame. Okay. In this case, I don't really have a descending trend line, I think. Yeah. Let's see. Okay, I don't really have a descending trend line here. Okay, but we can definitely see that the trend is downwards. Okay. Now, I'm gonna go in with my support and resistance levels. Okay, this is my first resistance and my first support, maybe just here. And my second support here. Okay, now we'll go in with some Fibonacci levels again. Hmm. Okay, we don't really have very nice levels here. Okay, my 100% level lines up with my second support. Let me see if my 78. Okay, it lines up, but it's no longer valid because price is already broken out of it. Okay, so just my 100%. Next. Okay, I think my 38 lines up, yep, with my first resistance. Um, okay, my 61.8 also lines up with my second support. Okay, so you can see here I have a confluence lab area here. Okay, so what I am doing here is I have recognized this Nike tick shape. So it's upside down, but this is the shape that I'm looking at. Okay. Yeah. So for this, we are using the Fibonacci extension tool. So it's the same retracement tool, but instead I'm looking at the 127.2 and 161.8. And I can see that both of these levels line up with my second support. Okay, and I feel like that's one of the reasons why you can see this reversal of the first support here. Okay. Okay, now let's pull out some indicators to support our analysis. Okay, price is moving below the Ichimoku cloud. So it's giving us bearish signals. MACD is also giving us a bearish signal, so we can expect price to continue to drop because of all the downward pressure. Once again, our indicators are also supporting this. Although we are seeing this rebound off of the first support, as I explained earlier, it's likely because of this 127 and also because of the release of the RBA cash rate. Okay, but yeah, there's a lot of downward pressure, so we can likely expect it to continue to drop towards our second support. Okay, confluence areas also tend to have confluence areas also tend to attract price. So we can expect price to reverse off of it, but we are also expecting price to be attracted to this area. Okay, so areas like our second support, where you have the 100% Fibonacci projection, 61.8% Fibonacci projection, and this huge swing low here. So we can expect price to continue to drop here. Okay. Any questions before we go? You have to include the wick in swing high and swing low in putting resistance and support. For Fibonacci, I feel like it's good practice to include it. But for support, swing high and swing low and putting for resistance and support levels, it doesn't really matter because as I mentioned earlier, it's more so levels, areas rather than levels. So you can see here, even though I didn't include the wick here, right? Okay, let me zoom out. But you can see I actually highlighted this area here because of my Fibonacci levels that line up nicely. So for these support and resistance areas, I am expecting them to be areas more than levels. So yeah, it doesn't really matter for support and resistance levels. Okay, I hope that answers your question. Okay, any other questions? Okay, if there are no other questions, yep, no worries. Thank you guys so much for joining me today. I hope you guys found this helpful. And for part 2, I'll see you guys next week. Thanks everyone. Have a great rest of your week. Bye.